that it came up that way. All right, here we go. Ladies and gentlemen of the interwebs, welcome to the Beacon TVL show, the weekly podcast from Beacon DeFi, your beacon in the world of decentralized finance. I'm your host, Professor Chris, and we've got a great show lined up as we tackle the news of the week that's relevant to you, our dear users in the world of on-chain investing. And somebody's keyboard is going crazy.
Oh, that might be on my side. Hang on.
That's okay. No worries. Today on the show, we have Robert. Welcome back, Robert. How are you, sir?
I'm good. Yeah,
I have been saying for months now, hire that man, and people keep hiring that man. So congratulations for being hired multiple times. So
yeah, thanks.
How is life there in your part of the world?
That's good. Yeah, it's always very temperate in Mexico City.
Yes, sir.
So, yeah.
Temperate también. And we also have from Women's Wealthy Ways community member, very prized member of our community. We have Susan here. Welcome, Susan. Happy 2025 to you.
Same to you, Chris. Thanks for having me again.
Absolutely.
Great to see everyone.
Yes, great to see you as well. And we've got a lot of things to talk about today. We'll go ahead and start with what has been a bit of a roller coaster of the last week, obviously, in terms of how we're looking at the market. I wouldn't quite call that a V-shaped recovery. I would call that probably something you see from World 4 of Super Mario Brothers and the ice thing slipping and sliding everywhere. Probably the best way to talk about it. Ultimately, it hasn't really changed overall. Obviously, we are fairly flat to where we were this time last week. We had, I guess would be the easiest way to say it, probably one of the bloodiest days on Sunday. That would have been February 1st. That has been in recent history. And if we look at bubbles, you'll see a little bit, at least on the week. Let me just refresh that because they seem to hide when I do that. Again, a lot of red, except for some very interesting players, such as Hyperliquid refusing to go down in price. Same thing as Alm from Mantra. So, man, what a week. Unless you're a gold bug or someone who fancies gold as an asset, like yourself. Susan, we saw an all-time high for gold in the past couple of days.
It was amazing. It was amazing. I've been waiting a long time for it to catch up to what Bitcoin and other things are doing. So it was a good picture.
Yeah, you've got the physical manifestation of a store of value and then the digital version, and they're kind of both at all-time highs. So, I mean, ultimately, as a precious metals holder, this is something that you definitely want to hold long-term, right?
Yeah. Yeah, I think I'm representative of my age group where it's 1 foot in the old world and 1 foot in the new world. And if we're looking for foundation, those are the two assets we hold. I think people older than me, like my father, he does gold. He has no use for this thing that we call crypto. And my son would never hold gold. Like, why would he bother? So I think this is we're watching the transition as we're going, but I think there's a room for anything that is safety today because we're all over the map. Couldn't believe Bitcoin. Every time I look at it, it's up and down, all through the day. Like it's going from one extreme to the other right through the day. It's crazy, but it's really just sideways. It's been sideways for months now.
Yeah. And that's honestly probably the hard part about being a digital asset investor is that because it is 24/7, because there's so many things that can affect its movement. That's probably the biggest adjustment, I think, for some people who want to get into digital assets and crypto is that you need to not be too finely monitor. You don't have to monitor it all that much because if you do, you're going to drive yourself crazy watching everything there. So, I guess a message for you, Robert, what would be something that would want you to invest in something like precious metals over something like digital assets?
I mean, I think it's something like where if I did well in a certain cycle, and I felt that we were towards the end of it, I would maybe park, if I had the resources, I would park some money in property or, or gold, perhaps, if that seemed like a more stable place to put it.
Yeah, I agree. What I'm highlighting down here, I'm trying to click on it, but it's not. Oh, there we go. Oh, I can move the bubbles. There we go. What I'm curious about here is Tether Gold. So if you aren't familiar with Tether Gold, we talked about the establishment of what they're calling alloyed tether probably about 3 months ago, once they posted that gigantic $2.5 billion profitable Q3. So for me, like I was talking to you about before we came online, Susan, is I don't know if I'd necessarily buy gold bars, but I would be interested in derivatives. And derivatives are pretty decent in DeFi because this leads to things like perps and stuff like that, stuff that you'll only find in DeFi. So I would be willing to get the exposure of Tether, but outside of that, gold is heavy. You have to store gold, and that there's a whole other mess of security things that you need to consider when you're doing something like that. We'll talk about that in just a little bit because security is going to be something that came up quite a bit, at least over the last week. So what I will say about what happened this weekend, a lot of this dip, this cascading liquidation, was really more people just trying to de-risk, right? The oncoming issue of a trade war, really the only catalyst. I mean, there are some other things you could probably point to, but I think that the trade war, the tariffs that were put off on both Mexico as well as Canada and China, 25% to them and then 10% to China respectively, caused a big run for the gates. Why? Honestly, I'm not sure, but that's okay, I guess, because for all those people who sold, guess what? Whales and institutions ate that dip for you, buddy. Back up to, pushing Bitcoin back up above 100K yesterday before the Sachs conference. So
I went on a shopping spree.
As should everybody have, because everything was down really hard. It was a good zone to buy a lot of their altcoins, BTC, ETH, whatever you feel you have high conviction in. People are begging for an entry. Well, guess what? You got it, and most people ended up selling anyway. Well, a lot of people got liquidated. Let's be honest, before they bought.
I think there's lessons in it, though, because I wonder how much of this Bitcoin got rolled to gold, because one's going down, the other one's going up. So
that's a great point.
So when we've got such big, the investment houses in the game, and they hold gold as well, I could see them de-risking their crypto to go to gold, and that really works for them. And I think we're probably going to talk about this later, because what it does drive the price down, and then they can reverse it right back, and then they're getting back into crypto low, getting back into their Bitcoin lower than where they sold it to go to gold. And so I think, and all the whales, if you're a whale, you've been around a long time, you probably are holding gold as well in some form. It doesn't have to be like gold bars, just holding gold, futures, gold, whatever. You're going to have that as a pivot that you can go to.
Right. Not necessarily a hedge, but a pivot.
Yeah, that's right. And just sort of rotation. That's the word I was looking for. So you just rotate into one and then rotate back into the other.
I did want to ask you, Robert, being there in CD, I just wanted to know, with regards to, overall sentiment in that area with regards to tariffs, is there a bit of a panic? Is everybody just kind of like, oh, this is nothing, this is business as usual type stuff?
I think people are kind of taking it at face value, like in terms of what Trump says, and I always tell them, like, it's political posturing, most of it. It's like saber rattling, and it's a negotiating tactic essentially. But a lot of people just think that Trump is kind of a joke here. Like they think he's crazy, basically. They think he's like unstable.
Okay.
And so like a lot of people are quite fond of the new president, Sheinbaum.
Claudia Sheinbaum, yes.
Claudia Sheinbaum. And so they think that she's handling it pretty well, articulating herself pretty well for the most part. And they just think that Trump is unhinged.
Okay. Well, what's interesting is, I tweeted about this. I'm not going to pull the tweet up, but essentially looking at the timeline, looking at everything that was going on, it was a lot of saber rattling, but he actually backed off of the tariffs for an entire month, from February 3rd, due to the compromise on both Canada and Mexico to send 10,000 border agents to the border on both sides and help police fentanyl coming into the United States. And I just kind of looked around. I'm like, you liquidated 2 billion. I'm not saying he liquidated, but I'm just saying this event liquidated 2 billion in DeFi, possibly 8 to 10 billion on CEXs for fentanyl and border strengthening.
Obviously not. Obviously, there wasn't. I mean, that's like what it is on the surface, but I'm sure there's more.
Oh, no, there's more to it besides that. But at the same time, it was like, you got to credit Trump for trying to appease all of the people in his base that support him up until this point with all these executive orders. But we talked last week about manipulation, right? Because Trump meme coin comes out, flushes all the liquidity from all the blockchains over to Solana, pulling all of ETH and everything down with it in price. The coin launches, it goes nuts, it goes down, and then suddenly people are like freaking out, and then World Liberty goes and buys 100 million of a whole bunch of ETH, ETH, BTC, and other beta plays, buying on the discount what everybody else should also have been doing. So, I mean, this is it's a bit of a masterclass, and I'm not going to say market manipulation. Obviously, I don't want to get canceled, but at the same time, it's like it's crazy. I
think that's too harsh. I don't think it's market manipulation. He has said what he was going to do. He said it through his whole election. If people, two things, if people choose to take him at face value, even after all the time he's been around, and we've seen that his behavior and what he says do not line up, and they still choose to listen to the words, that's on them. That's not on him.
Yeah.
He is completely transparent, something that nobody's really used to. And maybe that's the problem. Nobody really believes that he is actually as transparent as he is. And you can think he's nuts, but the fact is, I can see, like, I don't pick a side. I'm a libertarian. I don't think, a government that's this big is all that I really want. But I can see why he has the following he has, because he says things and he says it in a way that people would like to be able to say it themselves. And then when he goes and takes action, he actually takes action that is very balanced. He didn't just throw he warned that he would do this if they didn't take action. And he doesn't do this in a vacuum. Both of them ended up in a room talking to him, and they came to an agreement. And what we don't know is why they folded. But obviously something worked, and now there are no, and if we went through the whole tariff thing 8 years ago.
Yes.
Exactly the same scenario. And nobody wants to remember, or they thought it was stupid then, but it worked. And now he's doing it again, and it's working again. And I don't understand the criticism, except that it's just, they're not used to it. They don't understand it. Now, I have concerns about where this is all going, but not because of what's happening today, but where this can go, because this is power playing.
Yes.
And power becomes corrupt when it gets too centralized. That's my only risk. But what he's doing today doesn't bother me. It's what he said he was going to do, and it's what I want him to do. And thank God a president that finally came in and did what he said he was going to do.
Yeah. I wanted to chime in here if that's okay.
No, go ahead.
Yeah, of course.
Yeah. I think you're right. I think he does actually stick to his guns, and so that's predictable and that's reliable in a way, and maybe even admirable in a certain sense. But in terms of the market, though, and how it affects the market, I think the loud and clear message is that he's not afraid to break everything. He's just like, in terms of if like multiple things can be true at the same time. Like he could be, initiating his agenda, and also be anticipating like the effect on the market and taking advantage of that. And so I think both those things are true.
Well, I think the last administration took advantage of the markets too,
Oh yeah.
So this isn't new either.
Oh no, it's
The
not
only
unique to him.
difference, again, is that he's more transparent about it and you can actually follow his bags,
Yeah.
So that's the only difference. And it's interesting. They had that whole conversation about you're not allowed to bring your investment portfolio
Right.
with you to the White House.
Mm-hmm.
And yet everybody has for the past however many administrations, and they haven't stopped now. So that shouldn't be a surprise either. I think in America, you have to be responsible for yourself. If you're looking at the markets properly, you are well protected and you recognize it for what it is. And if you haven't taken the time to learn something about how it is to invest, then it's kind of on you, because it's not like there isn't information and education and knowledge everywhere out there if you choose to become knowledgeable. For anybody that knows what they're doing, that was a gift. That wasn't a crisis. Mm-hmm. That was a gift. And so, we want there to be volatility. That's where the wealth moves from those people to us if we choose to take advantage of it. And we know that in crypto more than anywhere else, that this is how we're all getting wealthy, is because of the volatility. So instead of criticizing them, like if you don't know that in crypto, then you don't belong here. Go back to your ETFs and let those guys protect you. But if you're here, what are you thinking?
Amen.
This is a good thing. This is a great thing.
Yeah, I was going to echo that sentiment for sure. I mean, what this indicates to me is that there's going to be a lot of volatility, in both directions. And and regarding like being responsible for yourself, etc. I think was it David Sachs who issued a statement around meme coins and altcoins. And was like, hey, it's your choice, like hands off. And I was like, clap, excellent. Yeah, I mean that's the crypto dream, honestly. Yes.
That's right. Trump and those guys didn't break the financial system. Crypto did. And that's a good thing. It's what we've been trying to do for 12, 15 years, is break the system. This is what it looks like when we break it. It has to actually break and fall down. And if it doesn't, then it never gets to change. This is what we're going to see. And it's only getting worse. Like, this is going to be a crazy ride this year. And I suspect 2026 is going to be the end of TradFi. It won't be gone, but I think that it's going to have a 2008 experience, and people are going to have to decide where they come when we come out of it 4 years later. 2030 is going to look completely different from today.
I like that.
And I can't wait for it. I have been waiting for it. It's why I'm in crypto, because I want to be on the top of that wave, and I'll take anybody with me. But if you don't come, then you're under it. And just this weekend was a perfect example. Like, either you want change or you don't.
And I think what was great about the system is that it didn't break, right? In terms of DeFi. DeFi handled liquidations, went through perfectly fine. Nothing broke. Everything is a beautiful thing in DeFi. So I appreciate that. And I appreciate the segue to the next piece. If you're here along with us, join our absolutely free group. If you want to learn more, Susan, thank you so much for speaking the truth about what you need to do about taking control of your finances, your financial future here in the world of digital assets. If you want to learn more, join our free group, TVL, Total Value Lock, namesake of this show. Absolutely free. Learn from the best in the business. Run across wonderful people in our community like Robert, like Susan, who believe that you should be taking advantage of this. I mean, this is your spot to get your hands on generational wealth, and do so at school.com/beacon. Along with that, now we're within 3 weeks of ETH Denver. I know it's crazy. the spiritual home of Beacon DeFi. And we're going to be doing some great stuff. We normally have a master class that happens every month. This one's going to be in Denver. I'm going to do it live in Denver, Saturday, March 1st. If you want to join us here there in Denver, please let me know. Happy to accommodate you. I just want to know because I'm going to be renting out a venue for that or figuring out a venue. And I need to know the head count for, what's going on. I'll have drinks, I'll have snacks for you, that type of thing as we learn on a really fun topic while we are out there. But again, if you want to walk the floor with me or anybody on the team, just be around other people in this space that love DeFi, love everything connected to DeFi, whether in ETH or Solana or Bitcoin, even XRP. Join us in Denver for a really great social experience. Forming the bonds between our communities is really what makes Beacon shine. It's the reason why we have the community that we do. We can all win together. We want to win together. There's strength in numbers and there's strength in educating each other. So help us in our goal to make DeFi more accessible to the public. Join us, school.com/beacon. Okay, two big things we'll look at before we move on to the focus topic for today. Berachain, layer 1, proof of liquidity blockchain, pretty much shilled by every key opinion leader in the space for the last 6 to 8 months. Really just in their own bubble, let's be honest, because I don't know many people who are normies who know much about Berachain, but it's launching tomorrow. There is a checker if you want to check your allocation, if you've been, yapping about Berachain. But this should be interesting. I don't know. I mean, I've been to Berachain events. I've met Berachain team members. What will be interesting for our community and for those of you who are watching and are trying to figure out, well, what the hell are you talking about, Chris? Is really how to get to Berachain, because there are a lot of good ROI investments that are going to be on Berachain with respect to yield farms, with respect to staking, with respect to even if you're into meme coins or NFTs. The proof of liquidity mechanism should be as a novel idea, pretty interesting. We have links to, and I'll have links in the show notes to their honey paper and other things if you're interested. Well, they launch tomorrow. Obviously, there's going to be people rushing to Berachain. I don't think you necessarily need to, but definitely over the next couple of weeks, we'll be talking about it more. You'll get to learn more about what's going on, and you'll see exactly what to look for in something in Berachain. It is another L1. It's not a layer 2, which that's part of the new narrative for what's coming this cycle. But if you're interested in Berachain, they launch tomorrow, and if you've been following them, good for you. Congrats to the Berachain team on this. They said they were launching Q5 2024, so clearly Q5 starts tomorrow. And that's all I'll really say on that. Do you guys have any thoughts on Berachain before we move on?
Go ahead, Robert.
I was going to say, I'm not sure if I've been active enough in it to receive any sort of airdrop.
Yeah.
But it's been on my radar recently, because I just think that, with new launches like this, there's some good short-term APR opportunities.
Yeah, there's a lot of money in Berachain from a lot of whales and a lot of people who are pretty influential in the space. So
I think Boyko is one.
Yeah, Boyko is big.
I want to check out.
Is it going to try to take on Solana, that niche, sort of that fast and that credit card layer for the future?
I wouldn't go that far. It's always been a bit of tongue-in-cheek with regards to how Berachain is going to handle things. There are some novel ideas there, like with proof of liquidity as their mechanism. So for me, it's a wait-and-see moment to see exactly what the effect is going to be, but they're definitely part of the mind share. A lot of big names, at least in the DeFi space, who are big in building, are very bullish on Berachain. So what happens from here is really just going to be a product of their marketing to the general public, because the key for Berachain is how can I get there easily? What can I do there? And how can I on-ramp and off-ramp my funds if needed? It is EVM compatible. So if you use Rabby, no biggie. You can just bridge right away. But it's really a matter of how good the bridges are going to be, how fast is the chain, how performant is it, and is it a good experience? So we'll find out more. I actually thought they weren't going to launch for another 2 weeks. So interesting that they're launching tomorrow, but we'll see what happens, and best of luck to them.
Yeah.
Big news Friday, and I was actually leading our town hall call on Friday. when this happened, but Uniswap V4 is out. I was setting up a position on Uniswap V3, which was their concentrated liquidity system on Uniswap, and then I went to go. I just saw the drop down. It said V4 or V2. I'm like, wait, that has to be a glitch, but no, it was live then. And what's interesting about it is really just the idea that you can do concentrated liquidity and other liquidity strategies using what's called hooks. And hooks are just it's a smart contract or just some type of way for you to include other parts of your workflow into a swap, into a trade. And there's a couple of different protocols out there. Bunni is one, for example. I believe that's on Base and Arbitrum that has V4 baked in out of the box. So some interesting ideas there. Feel free to check it out. I wanted to give a hat tip here to Devin Walsh, who's the executive director of the Uniswap Foundation, for putting out a really great mega thread. I'll put that's going to be in the show notes, specifically if you want to link to this. So if you're a developer or if you're just really curious, dive in, see what's available. There's a couple other protocols coming out soon with Uniswap V4 also available to put into for LPs. It's live now on 12 chains, so I'm assuming Oku will also be a big part of that. I'm not the liquidity portion is not what I'm curious about. It's actually the hooks, because the ability to include workflow from other smart contracts into your swap is, to me, the most interesting part. And you can interact with LPs without being, I think you can do off-chain type of stuff. So early times, V3 came out in 2021. It didn't really catch on until 2023, very early. So there's going to be some ramp up to this, but the fact they finally put it out, good sign. And
do you have some good examples of how those hooks work?
Well, I mean, we can look at Bunni, and hopefully it'll let me in without my VPN on.
What would be a use case for it? Like, where, from a business perspective, where's the value to it?
Yeah, that's a great question. Ultimately, you're able to, or rather, because of the hooks and some of the other parts that are in it, you're able to create probably multi-protocol strategies within one swap, right? With hooks, you might be able to, directly get into a flash loan facility, for example. That might be something that might be, and I know one of them specifically calls into Aave whenever you're swapping in between. You could probably even put in some type of aggregator to help with a workflow.
I was thinking one interesting use case could be prediction markets.
Prediction markets is a good one. Yeah.
Like selling based on certain prediction market results, or selling or buying based on how prediction markets are going.
Yeah.
So
yeah, I think also for even like for gas and stuff like that, you can actually use an aggregator to get the best return overall, and do limit orders or something like that. I think more perp dex like orders could be done, especially if you use a smart contract. It'd be kind of weird because normally smart contracts they're immutable. So you'd have to, if you had something specific, it'd probably have to be something that was, deployed beforehand. You don't want to be in the business of having, smart contracts deployed every second or something like that for something like this. You'd want to use existing infrastructure. I could definitely see one thing that with CCIP, which is Chainlink's interoperability protocol, they have something like this baked in. So further baking in where you have the ability to have multiple services bundled in a smart contract with each transaction. Yeah, I think there could be some interesting things here. It's still obviously very early. There's going to be a lot of experimentation. My worry is, where does the exploit happen? Where do people use this for the wrong, right?
Right.
Yeah.
So that's really what I'm very curious about, seeing what people are going to cook up here. But for me personally, I think this is just another layer for AI agents and other types of things to build more interoperability, more execution touch points to help automate things.
Definitely for AI agents, it makes it a lot easier for that. Yeah.
Now they do have some pools here on Bunni, specifically. There's not very much TVL here. Okay, so rehypothecation. That's the word I was looking for. So USDC, USDT with rehypothecation. My guess is into Aave. Okay. So you might be able to get more, kind of like how Morpho works, where you're actually, you're staking into something for using your collateral for other types of collateral to then make money to market make with. You could maybe do something like this as well. So you might be able to actually get additional 36%.
That's pretty good.
All right, we're talking about this in an hour.
On dollars.
We're talking about this in an hour on market making liquidity, because this is now that opened my eyes. These types of things open my eyes. So, there's a couple more coming, but Bunny is the first. They were day one. They have, interesting double geometric liquidity density. That's interesting. With rebalancing, having rebalancing as an option, that's actually interesting too. I mean, there's a lot of things here that are interesting that just brings an additional layer of not just smart contract complexity, but just smart contract functionality into something like this.
Yeah, opens up a whole world of automation.
Yeah. So excited about that.
Yeah.
So yeah, we'll be watching to see what happens with Uniswap v4, but
I really think these are all, we've got big money coming in from the banking world now, and everything that's coming out now is to give them the speed and the flexibility and the platforms to allow them to bring all their derivative world from the old world on chain. And so and it all comes down to, we need as much liquidity. We need people leaving their money out here for us to play with. And so I can see, I think this is the direction we're going. This is finance. We're seeing finance. And of course, they've been algorithms for a long time. So tying finance to AI and throwing it on chain is like it's a no-brainer. So
you just actually brought up something I was just thinking about, Susan, and that's controls. I think that's really the one thing that possibly could be a huge win here for Uniswap v4, is especially with institutions. We have a lot of people are wondering, are there institutions here in DeFi? Yes, they front ran all the retail. They're already here.
Yeah.
They want to operate on their own blockchain or private blockchains where they have control. So you could actually have this here as a bridge to go back and forth between their, pulling liquidity, arriving at orders and stuff like that. This is a very interesting development. Now that I've thought about this, there are other ways to do this that are going to be interesting, because you can have things like CCIP in the background, where it's interoperability, chain abstraction. Everything just kind of pulls away, and it just all happens in the background for you. Now you don't have to question where it's coming from. You can get probably the best rates you can, finding whatever is out there. So.
Yeah. Well, and when you listen to David Sachs, they're saying, we'll do the reserve, all that, but that's not their focus. Their real focus is, what are we doing with stable coins?
Yes.
That's where they can affect the economy and get a handle on it. And it's a natural pathway for finance to get on chain, and they don't have to mess around with meme coins and all that other stuff. That's for fun. What they're interested in is, how do we turn money into something we can use to support the economy? That's stable coins. So all of these things are going to be that.
Into lots more money, basically.
Yeah.
Because institutions are going to be like, how can I make all that money that Tether is making?
Right.
So.
Exactly.
And I've been calling for it for more than half a year, guys. We're going to see a tsunami of RWA stablecoins coming. It's all coming.
Yeah, exactly.
I'm going to go ahead and move on to the next subject, if you don't mind.
Just wanted to make one comment. I am actually happy to see that this is happening with Uniswap, because that is a platform that has been really stable and reliable for a long time. And aside from the fact that it kind of centralizes everything again, they are a trusted platform, and that, as far as I'm concerned, I think they're a great platform. So I think that's a good place for them to be playing.
Yeah, this will get copied. It's open source, so this will get copied and put out to something else. So I'm not. Yeah, we're gonna. This is a novel idea. We're gonna see more things happening off the back of this. So one thing I did want to talk about today specifically, is, we're talking about changes in policy and landscapes. As a user, you have to be safe and secure. Now, Coinbase has been shutting down accounts. We've seen that, mainly because of an algorithm that's fairly aggressive, but also because there are a lot of people losing money to scams. So I want to take a quick second to refresh everyone's memory on things you should be doing so you don't fall prey to a social engineering attack, to looking at the wrong link, especially in a world where it's very easy now to get online, right? You can just throw your phone up to your face. Hey, I'm online now. So we have to really just make sure that we're in the right frame of mind, because what we call operational security, or OPSEC, is such a huge thing to have here in this space. Having self-custody, having control of your assets is a huge responsibility. In some ways, you can act like you're holding a backpack full of hundreds of thousands of dollars, as a metaphor, right? And you have to do the right things to make sure you keep your money safe. So, and I want to say that I responded to a very interesting tweet about someone who said that people's Phantom and MetaMask wallets are getting drained because they connected, or they used the same browser to connect that they used to go view Pornhub. And that is, first of all, that's probably true. And the second part is, stop doing that. Stop doing that. So what I wanted to say about this is this. There are some basics of operational security that you need to keep in mind. And I don't think I have anything else here. Yeah, so essentially, one thing that scammers have done is that they've cloned the Coinbase site nearly 1-to-1. And that's a huge red flag. That is something you need to make sure that you pay attention to, is that if you find a site that you use regularly, bookmark it. Don't type in websites. Try not to, take your time, double check. One thing that we say very often is, don't trust, verify. Make sure you are at the correct site. Make sure if you bookmark a site, that is the correct site that you bookmarked. We'll start at the top. Compartmentalize your risk. Use one browser for your investing activities. You can use browser profiles within that browser. That's one thing that's a fact. That's a really nice feature of Chrome, is that you can have different profiles, which will give you different sandboxes to play with, different extensions. Use them wisely. Have one for research, have one for investing, and then whatever else you want to have one for, speculating, for example. But you don't want to mix the same browser that you're consuming Netflix, that you're consuming whatever else, getting into your bank account, with something that you'll also use for investing. That's a very bad idea to mix those two together. Use a separate email for crypto and research activities. Very simple. It's you'll see things like, hey, sign up for this. We'll get you'll be in the running for a whitelist, or you'll be in the running for, winning a sweepstakes to earn a free computer, or a gaming computer, or something like that. Please don't use your regular email for that. Use a specific email specifically for things like that, because you're going to get a whole ton of spam built on top of that, which will clog your feed, take you away from real legitimate things that you probably are looking for. And it puts you in a database of all kinds of things being marketed to you. Like, I don't answer my phone anymore unless I know who you are and you've told me beforehand, because there's been data breaches. There's been all kinds of things that you're going to be a part of. So you want to make sure that, use a separate email for crypto and activity, stuff like that. Don't give your phone number, get a fake phone number, or just get a generated phone number you can use, like Google Voice or something like that. Use a password manager, so you only have to worry about one password, which is a master password. I'll be honest, when I'm on coaching calls and I see people, typing in a password that's 7 to 10 characters long to open their MetaMask or their Rabby, it hurts my heart. Please stop doing that. Use a password manager, so you only have to remember one password. So in the event that you get compromised, nothing else gets hurt. And also use a separate email for that as well. I had someone, a friend of mine, who used his personal email in his password manager. He got compromised, and guess what? That same email was used for his mortgage, his lights, his car payment. That all just went really, really badly. Don't be like that. Have separation. Understand the risk of what you're taking. And in investing, there's no such thing as a risk-free investment, right? Just make sure you're in that mindset, and just use wallet separation in general. If you're speculating with a wallet, let it be a separate wallet. Don't put that near your hard-earned funds. Have a wallet just for speculating, just checking out to see if you like a coin, if you like a project, you buy a coin. You can always transfer money between wallets, and you should make that a regular practice. Whether it be with your speculation wallet, your farming wallet, or your cold storage wallet. You don't want to intermingle the three. So make sure you have a good subsystem for that. Stick to that subsystem, write it down, make it a routine. These are all things that are going to be pro tips for you to stay safe in this, and not be one of the statistics here of being someone who got, socially engineered. I will tell you that, much like as someone who enters in sweepstakes, if you own crypto, you own an NFT, you have a target on your back. And I'm not saying that to scare anybody. I'm just saying it as a reality point. When people know that you have some sort of crypto asset, they're going to put a target on your back. Be very careful about that. I'm just saying that for your own personal safety, for your family's safety. I would not flex any of that type of stuff to anybody I know. Be very humble about it. We're all here to invest. You don't see a lot of investment people who have big money like real estate or stuff. They're not flaunting what they have. If they do, it's not a good look. You're just asking for trouble in a lot of cases. So be defensive, stay educated, and be vigilant about your security. That is something that is a non-starter in our group. You got to be that way. If you don't have that mindset, you're not ready for crypto. You're not ready for digital assets, period, because it's a very big responsibility that regardless of how you are in the system, you have to keep a good head on your shoulders about. Any thoughts from either you or Robert, Susan?
Just here. It's I do a crypto class for beginners. People have never tried it and they want to get into it. And I realized in this past month that I've been running this, that I probably talk about the security of stuff 90% of every class, because as you go through each of the steps, you're having to think again, what am I using? Where am I going? How am I doing this? I actually require them to open a Proton Mail email account only for their crypto. They can't even be in the class until they've done that. And then they have to open a Brave account, and everything happens there. And I'll even, if they've got an old computer or something that they can use that isn't their regular computer, then I encourage them to go there. So it really is a very structured approach to doing it. I think I've worn them down ever since they started. They just want to go buy some crypto now. But at the end of the day, once they start, I keep having to remind them, you're only going to put $100 in, but when you come back in 10 years, it's not going to be $100 anymore. It could be thousands, tens of thousands, exactly, hundreds of thousands. So do the smart thing today, and then you really don't have to come back for 10 years. But you don't want to come back in 10 years and it was gone 10 minutes after you bought it. Yep. So it's it is the most important thing. Freedom and responsibility walk hand in hand, and you can't have one without the other. So if you're going to live in this world, you have to be personally responsible.
Agreed. Robert, your thoughts, sir?
Yeah, so use a strong password generator. Don't even use your own, and just write them down and put it in a safe place. That's one way to really avoid problems like that. I mean, if you have the resources, even in terms of privacy, or whatever your situation is in terms of taxes and so forth. You can also use just start off with a clean device, like buy a separate like a separate Chromebook or MacBook just for your investments. Yeah. Oh, you're muted, Susan.
No, I think she agrees. No, I would honestly not recommend the Chromebook just because of the way Chrome works, and they don't allow other privacy browsers and stuff like that. You can use one, of course.
But do they not? I didn't realize that.
Just be careful. I mean, you can, of course, get around all that if you're savvy enough, but most people who aren't, I would just recommend if you're going to use a Chromebook, make sure you use the different profiles that are available, and have a profile for just doing your regular stuff. Have another user on your Chromebook specifically for stuff like that, and you should be fine.
Yeah, because I mean, even if you start off with a few $1,000s or $10,000 and it balloons into 100K or even more if you're lucky, or follow Beacon Mastermind or
Change your life.
Yeah.
Appreciate you, man.
Yeah. I mean, yeah, like Susan said, I mean, at some point, if you're doing it right, you're going to make money.
Yep.
And yeah, you have to start at the beginning. Be safe from the beginning. So.
And someone just asked, I replied on Twitter, they're like, how do you make money in crypto? And my response was simple. You don't lose it.
Yeah.
Don't lose it. And you're making money, right?
Mm-hmm.
Like Susan said, you buy $100 of Bitcoin, come back in 10 years and see where you're at. You can do that with multiple things and with short and long-term time frames. And yeah, we'll see where we land from here. But what I did want to do is go towards our focus topic for a little bit. And it's really just more about talking about the landscape of crypto, at least from not necessarily from an American point of view, but maybe from a Western world point of view, now that we have a pro-crypto administration elected here in the United States. 2 weeks have passed, if you can believe it, since the inauguration. And what a wild ride it's already been. It'll be very interesting to see where we go from here. But I did want to outline a couple of things that we've already seen. So 3 or 4 executive orders have come through. They're all kind of talking about the same thing. The biggest one was the one that was, I believe, on the 23rd. But we'll talk about a couple of the other ones that are out there. The first is that essentially the working group, this is from the 23rd, there's going to be 4 big things that came out of this. First, a new working group created to establish or at least evaluate the establishment and maintenance of a national digital assets stockpile. Protections for minors, for individuals, for entities who are looking to do self-custody or transact with digital assets, specifically with banks. Abolishing the idea or creation of a central bank digital currency or a CBDC. And then a working group comprised of multiple heads of cabinet positions. So we're talking about the Commerce Secretary, the Treasury Secretary. I think the Department of Homeland Security chair is on that group, as well as heads from the SEC, the CFTC, and a couple other government entities. They're coming together within 180 days to create a clear and comprehensive framework for digital assets, particularly with stable coins. As you mentioned, Susan, that's going to be a big focus for them. And it's all basically for the desire to create a path for the US to become the leader in crypto, digital assets, and AI. And that leads to, what we just talked about, the most recent one, which actually creates a sovereign wealth fund. We talked about this last week. There's some other ways that they could go about this. They don't necessarily have to create a sovereign wealth fund. They could actually just amend the current Treasury Reserve and make Bitcoin an asset or a basket of assets to go in there to work with that. He didn't mention Bitcoin here, but yesterday, David Sachs, the crypto and AI czar that he appointed, he did mention Bitcoin Reserve in his press conference. So he also mentioned that they're going to stay out of the way for blockchain technology growth. Hester Pierce, we call her Crypto Mom. She has a very active role in the working group that's going to be working for the working group on digital asset markets. And one thing that David Sachs mentioned is, and this is something that they're looking to do, is bring crypto companies back to the United States. We saw so many companies leave the US for the Bahamas, for Cayman Islands, for Europe, everywhere that has either some neutrality or some sort of a crypto framework already. And basically he kept saying the same thing that was echoed during the inauguration speech, to create a golden age. And I think that's probably the one thing that is interesting. Before we start talking about the analysis with you guys, one thing that just came up this morning specifically was, and I thought I had the, oh, do I? No, I don't. Let me grab that. Sorry. There is an interesting article came out today from the acting chair of the FDIC, Travis Hill. he mentioned that the FDIC looks forward to engaging with the president's working group on digital asset markets. This is a very large pivot. This is a huge pivot, specifically with regards to the banking industry. They actually published a tranche of 790 pages of correspondence between the FDIC, clients, regulatory banks, institutions, kind of reinforcing that, yes, we see these petitions. So the fact that they're going to be reevaluating the supervisory approach to crypto-related activities is a huge win for crypto. It's a huge win for DeFi specifically, because DeFi, as you all know, is a wonderful, fantastic financial system used for transacting between users and entities and protocols, not just for investments. It's more than just investing. It's also payment rails, it's infrastructure. It's an entire financial system that was built that no sovereign entity owns, no country owns it, and it was built without spending $1 of taxpayer money from anybody on this planet, which is why governments are scared as hell of DeFi. And something like this is a good thing to specifically embrace that, right? So I wanted to start with that. Susan, this is a huge pivot for the FDIC. How do you see this now playing out with the landscape and the executive orders that have been put out?
I think it's the commitment. It's more than anything. Think about why we even have an FDIC. Back at the beginning of banking, they had to convince people to put their money into somebody else's hands to protect it.
Yes.
But then they just had a rash of Bonnie and Clyde experiences where it wasn't protected or safe at all. So if you're going to hold on to a financial infrastructure at all in your country, you have to be able to protect the money of the people. And by doing this, they've basically said, we recognize that this is money and it's your money. And if we want you to come and live in this world where we're moving to, we have to protect the people who are putting their money on there. Now, I find it very, they had to go there because they've spent the last 15 years telling everybody that it's scary and you're going to get scammed and you're going to lose it all and it's not real money. And so they had to do this if they really were going to make this a financial system that we're going to move to, which that also is a no-brainer. Why would we stay in paper worlds when we can go use blockchain for running our financial rails? So they have no choice. We've known this from the beginning. They had to go in this direction. This is the commitment back to the population that we are accepting this, and this is the new world, and we will protect you in it. What is interesting is when we went to Bitcoin and crypto, particularly Bitcoin, the idea was we don't need you to protect us, because as soon as you step in to start protecting us, you're going to start putting rules around that. And you now have access to our assets again. I still tell people, don't buy ETFs. Learn how to do it right. Otherwise, it doesn't matter. It's just numbers on a ledger. And so, it's like everything in this last 2 years. It's great in one way, and it's like it's missed the whole boat in the other. But I think we had to get here because we don't bring on the world if we don't make it possible and free and safe for them to do it. So.
Yeah, Robert, this is an interesting move because I think, as Susan mentioned, it shows commitment. Do you think overall public sentiment on a decision like this should increase, should, build trust, which is probably the biggest thing that crypto needs to work on is, creating a trustworthy image for itself. I think for me, that's the biggest shocker of this specific statement that came out.
Yeah, absolutely. I mean, I think if you look at like the debanking of crypto, a couple of years ago or the past couple of years, especially Operation Choke Point and all that kind of stuff. Yeah, this is like a step in the right direction when it comes to that. I am a little bit concerned that there is like a little bit of a risk of some of this of some of the support being like a Trojan horse long term, where the end game of huge financial firms like BlackRock and the government is to actually corral people into their own systems, into their own blockchain systems that are just like inescapable, basically, in 5 or 10 years, which is probably going to be the real final battle. But in the short term and in principle, I think this is a good move. Yeah.
Yeah, it's CBDC by another name. Instead of creating it in the government, we just allow the banks to create it, and we call it something else, and then we can still get the end game. We still control the people through it. So, yeah, I agree.
Yeah, I think what a lot of this is just setting up landscaping, is what I like to call it, to allow people to start planting seeds, right? Because in order for the U.S. to become a world leader in this space, I mean, it's a little bit of the undeniable. There needs to be more companies back in the U.S. in a good regulatory environment to start doing this, right? Because we're the hub of capitalism, if you want to call it that, right? Having more companies like Ripple, like Coinbase, like even PayPal and that whole conglomerate coming back in to the U.S., issuing tokens, having a spot where people can do that, and hopefully, in the event that less government allows this to flourish, and then suddenly we have a full private sector of different options. The idea is that they just want it to happen on U.S. soil as opposed to anywhere else where they can't, I don't want to say protect, but at least cultivate things in their own special little way to make sure that everybody makes a little bit of money. Because let's be honest, there's a lot of things that they're looking to do with profits from this, but that may or may not ever happen, right? Are we ever really going to trim the federal deficit, with a sovereign wealth fund, things like that? I don't know, but they're willing to try just about everything that makes good money that people have interest in to facilitate the ability for that to hopefully grow, right?
Yeah, hopefully that's the outcome. Yeah, and like the concern is just like, even though it's the regulatory landscape is looking much friendlier and doing kind of a 180. If you look at the way that BlackRock is, or if you think about why BlackRock is launching these Bitcoin ETFs, it's that they want to control all the liquidity. And so you don't necessarily need to put forth like draconian regulation to control things. You can just buy everything. And yeah.
Exactly.
And if this allows them to do that, then that's another vector that they can use to control things. So
yeah, I see things popping in my mind, like the national debt clock being sponsored by Fartcoin or something like that, right? Like suddenly they're throwing, we're throwing a national holiday in honor of trimming the deficit by 3 trillion thanks to Mudeng, and hippos are suddenly everybody's favorite plushie. Actually, I'm here for that. Let that happen, please.
One more generation, and absolutely.
Wait, when do we get like Fartcoin Arena? Like
exactly that. I'm waiting for that too.
We're replacing Madison Square Garden.
Yeah, now called the Fartcoin Arena. I love it. That's it. We're changing the title of this episode to the Fartcoin Arena. You get. There you go, Robert. You win. You win.
I think with everything though, this is a group that is pro, and so they're going to do a bunch of things. But then what happens in 4 years or 8 years or 12 years? And this is always the case that it's always the case that there's going to be this push to centralize and do it either through just owning the whole asset or having the rails set up that the masses don't really have that independence anymore. And so there's always that risk. And so it's about keeping your eye on that ball. In fact, I actually wrote a Substack. It went out this morning, and it was about that this is about power right now. And we have to make sure that even as we think we're getting what we want, what are the long term? What's the long tail on this? Where does this take us if we get another Biden administration that wants to undo it all? That becomes a lot harder. Or maybe scarier. I've heard some really weird things recently. This idea that if the government's giving companies money, that they then would hold shares in that business. And I'm going, well, that gets very, very close to government controlled business. Like it's not about sharing money anymore. Now it's ownership of those companies by the government. Well, that's fascism, like to drive that direction. So I think everything that we're doing right now, this is such a volatile time that every decision that's getting made has to be looked at from where can it take us next, even if we think it's a good idea today. And a lot of people are like, a lot of the people with big money, a lot of people that were standing on that dais think that's a great idea. And then I go, well, of course you do, because it's your companies that you're going to be in bed with the government on. And so you're now that, where does government end and where does business start at that point? And that can have some long, difficult connections down the road. So, and there's kind of that movement going on, which is one of the things that made me think about, okay, look at the faces behind Trump on Inauguration Day. Like there's a new movement going on, and it can go too far. So, and these are the kinds of things where we see it, where it looks great today, but where's it going to be in 8 years? Where will
I think this is a pretty telling sign, right? This came out 2 days ago. World Liberty Financial, which is President Trump's Ethereum DeFi protocol, they're looking to approach crypto projects for token swap deals, minimum 10 million, by the way. Really just treasury swapping here, right? This is a very interesting move by them because of the high profile nature of President Trump and his companies and branding. This could be an interesting power play, as you mentioned, right? The ability for them to, because they have a ton of money, to go into to spread out here, to essentially have their own branded DeFi based on, okay, we have 10 million in your protocol. Let's try this, and this. The centralization aspect of influence and power can be it's a slippery slope, right?
Yeah.
So we want to make sure that decentralization still stays at top of mind. Obviously, some centralization is going to be needed to help to build the rails effectively, I think is probably the reasoning behind that. That's why USDC and USDT are in the position that they are in. But be careful for people making power plays for stuff like this. Obviously, nobody owns any of this. We don't want anyone to own it, whether in spirit or in, true ownership. But yeah, let's just kind of keep that in mind. The landscape is ripe for a lot of growth right now. We're in the midst of what could be a trade war globally. He's made the concessions, but in a month after everything boils down, maybe that goes back to where it was, and we continue to see something interesting. He wants to send tariffs to the EU. I mean, there's a lot of things that can happen here that possibly this could be good for DeFi, because if enough people know about DeFi, people will flock to a digital system that doesn't involve banks, that doesn't involve a lot of things that locally, well, that might be a little too far-fetched because we just don't have the infrastructure to on-ramp all those people right now. But it could be something that does happen in a couple of years. So, because Solana's baked into Shopify Pay, as is, I think, AVAX. You can use Coinbase Commerce and a bunch of other issuers to pay for transactions with crypto across the world. You can use protocols like Spritz to pay for your bills. There are multiple banking technologies that allow you to use funds on chain through debit cards. There's just a lot out there. So, but Yeah, go ahead.
I have mixed feelings about the sovereign fund. When I was young in Alberta, in Canada, with so much money coming into Alberta because it was an oil patch in the time when we were going through the oil crisis, and then coming out the other side, all of a sudden there was money everywhere because we'd gone to a world standard for pricing. And all that excess cash ended up going into a sovereign fund. Sovereign's maybe not the right word, but it was a provincial fund that ended up truly supporting that province for decades. It opened us up. We ended up with the Olympics. We ended up with all of this massive growth in Alberta. And it went for years until we got to the stage where the politicians at some point went, oh my God, we got all this free money. And I think it's actually gone today. And so that's what happens over time. So there's that, but it did create true wealth for the people of that province across the whole population for a long time, for maybe 20 or 30 years. But then there's the other alternative. Saudi Arabia also is a sovereign fund. And having that kind of a fund has allowed the king and the royal family to control the country with a very strong fist, because the money is very centralized. And so both can be true. It's all in how it gets utilized. And so again, a great idea to find a way to build wealth for America, but how will it get used? And so here we are again. None of these are bad ideas. All of it comes out in the implementation, and not necessarily today's implementation, but future. I think it's what makes the Constitution of America a once in a lifetime or a once in 100 or 1,000 year thing. It was built and had a strength that could allow it to be enduring for a long time, and is still a place we can go back to and get to first principles on how we want to do things. And there's not many things that accomplish that to contain where we're going. And so the sovereign fund, may be good, maybe not. So we'll see.
Spoken like a true libertarian. Gotta respect it.
That's true.
Robert, we'll go ahead and end the conversation with you specifically about, we're now in a bit of an eyeball and a space race, right? It's all about eyeballs. It's all about, figuring out who's going to be winning, especially with DeepSeek and that effect. It's caused some really interesting implementations for competition. And I do see that, with the pro crypto legislation, with all these things putting into place, we could see a very interesting second half of 2025 with regards to what you'll be able to do with your investments moving forward with regards to digital assets. So I just want to leave the floor with you there for a quick second.
Yeah, I didn't want to say we should add a constitutional amendment to protect DeFi.
I mean, President Trump would love that. He's got hundreds of millions in DeFi now.
Yeah, just to keep it totally safe and open. Yeah, that'd be amazing. I think I just want to kind of echo what we were saying earlier, me and Susan, especially about how we just got to keep our eye on the ball, make sure we're not entering into some kind of Faustian bargain where we're selling our souls for short-term gain, and just really keep our eye on these regulations going forward, make sure we're being protected long-term, and educate people we're all doing, especially you and Susan, on how to buy assets directly in primary markets, not rely on ETFs, not rely on centralized rails, even though that's helpful for upping everything and making us money. Not falling into that trap, I think, is going to be really important going forward. So,
I agree. And, as Robert was saying, we can democratize the future through what we're doing here in DeFi. It gives you a seat at the table, gives you the ability to be your own bank. And if you'd like to learn how to do that for absolutely free, learn from the best in the business, of course, join us at school.com. school.com/beacon, school.com/beacon, completely free to sign up and join our fantastic community. We are going to be turning a year old in 15 days. Really excited about that for TVL. We've grown so big, so quickly, and so thankful to everybody in our community. Thankful to our Beacon Mastermind founding members and members as well, and our Beacon Accelerator members for helping make all of this possible. I want to thank my guests again today. We'll start with you, Susan from Women's Wealthy Ways. Thank you again so much for being here on panel. Please tell us more about, you mentioned you talked on your Substack earlier. Please tell us more about that.
Yeah, so my Substack is not specifically about finance. It's more about macro, I guess, and my thoughts about what's going on. I am working on, so the past couple were about inauguration and what I saw and where I thought this was going to take us. The next series, I don't know how many it'll be. It's about what does AI world actually look like? Where's that going to take us? What happens to us in wealth and what happens to us just in work and society and all of those things. And so I'm digging into it. I love it. And I just sharing ideas and trying to dig down into the big questions. And then in Women's Wealthy Ways, it's just a community of women. We get together once a week, actually twice a week now, once a week, to just talk about the world and what's going on and how we should be thinking about investing in the world as it changes. And the other one is more of a workshop where we learn from you, Chris, and a few others, and then try to work through implementing some of these things in real time for a couple of hours, just actually acting on what you're saying. And so it's fun. It's not a large group, but we've gotten to be really close. And so any women out there who want to join us, you're welcome to just reach out through school and in the thread there. And yeah, you're welcome.
Thank you so much for being here.
Thank you.
Robert Williams, DJ, on-chain native, hire this man.
Yeah, you can catch me at ETH Denver. I'll, of course, be hanging out with Chris and the Beacon folks in a couple of weeks. Looking forward to that. I'm on X, Omega__84, so you can catch me there as well. And yeah, looking forward to seeing a lot of people at ETH Denver in a few weeks.
Yeah, same here. Really excited to see all of you there. Let me know if you're going to be there. I'm going to be doing a giveaway sometime soon for anybody who's watching live. Also, one thing, we just released the Beacon blog last night, beacondefi.io/blog. Really, really great stuff here. Going to be tweeting more about this stuff so you guys can learn more about the basics of what you need to be successful as a on-chain native here in decentralized finance and crypto overall. So thanks for being here with us, everybody. We will see you next week at 1 p.m. Eastern, as we always do. Take care. 07, as we say here. Beacons up. Banks down.
Thank you.
Take care, everybody.